Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Wednesday, February the 22nd, 2012. Well, the spinning top type candle today, and the candle we're analysing is the one we're highlighting here. The last candle on the page is still developing. Spinning top type candle denotes indecision in the market, and if we look at this candle, it's completely within the range of the previous candle. In bar chart terms, that's what we call an inside bar or an inside day, and that by itself is a candle of indecision, and that's because the buyers weren't strong enough to take out the high, but the sellers weren't strong enough to take out the low. Now, it's also an indecisive candle, spinning top type candle, because we have a small body and a shadow on the top and the bottom, and the shadow on the top represents downside price rejection. You can see a price rejection from this area where the market was rejected from over the previous 3 days. So this is a third day in a row where the buyers have lost commitment when they've attempted to trade up to higher levels, especially up to around this 133 level. By the same token, however, the sellers lost commitment as they attempted to trade down to below the 132 level, and we could see the buyers coming in around that area. So very indecisive trading at the moment. We do have the market attempting to break out of the top of the cloud, and it doesn't really seem to want to go on with that move. There's a lot of hesitancy from the buyers with this potential breakout. If we do see a breakout above the cloud, that would be a bullish signal with the Ichimoku charts, but I'd prefer to see a bullish breakout with the buyers having some sort of momentum to the upside to confirm the breakout before we consider that to be a significant breakout. If we do see a breakout, the resistance does extend up to the 133.20 area, so that's a very important level. But above there we also have very strong resistance. We can see the shadows on the top of all these candles extending all the way up to 135.50, so very strong resistance all the way above. To the downside, we do have strong support all the way through to the bottom of the cloud, and that extends down to about 128.5, so very strong support down below. In terms of big picture terms, the trend in the longer term time frame, the market is neutral because we're trading within the cloud, but bullish in the medium term and fast term time frames by trading above the Kijun-sen and the Tenkan-sen. We can see that the market is making a series of higher peaks and higher troughs, and we're just attempting to make another higher peak, but we now are finding very strong resistance in this area, and there is a possibility that we won't take out that peak at 133.20. So for the next day's trading, let's watch up to that area around the 133.20. Let's watch the top of the cloud. If we do see a bullish breakout, then that may give the market the momentum to carry on with a move to higher levels, but we do have very strong resistance extending a long way above that area. Watch the low of the current candle and the area around 132 for a potential test to lower levels, but we do have very strong support all through to the bottom of the cloud with some levels that were highlighted previously, and also the Kijun-sen and the Tenkan-sen, which are trading around the 131.30 area and the 130.70 area. Next, moving on to the Aussie dollar US dollar, and here we see a continuation of the trend to the downside. The candle we're analysing is the candle that's highlighted at the moment. That final candle is still developing over the next 24-hour period, and we have a candle that's made a lower high and a lower low. We have tested down below the range of the series of 3 candles, but we did see price rejection, and we failed to close down below